Hey guys, welcome back. Hope you all are doing well. In this video, we are generally going to discuss top 50 MCQs based on financial market. Financial market, whenever we talk about financial market, it is further categorized into two major areas. One is money market and another one is capital market. So, here we are going to discuss topmost MCQs based on financial market. The only request is please do like and do share this session with your friends so other can also they can also take benefit of these particular videos. And if you are new to my channel, please do subscribe. So we'll start with first question on your screen. So first question is which of the following is not a capital market instrument, right? So capital market, which is generally deals in long-term securities, medium to long-term securities, and it is governed by SEBI, Securities and Exchange Board of India. And whenever you talk about capital markets, so it deals in shares, bond, mutual funds, derivatives, debentures. So these are the product of mutual capital market. Okay, so now you have to identify which is not a product of capital market. So what will be your correct answer? Share, bond, mutual fund, derivative. These all are the part of your capital market. Commercial paper, they are generally part of money market. Okay, so whenever we talk about this commercial paper or treasury bills, dated government securities, call money, notice money, term money, certificate of deposits, these all are the part of money market instruments. Okay, so please do remember this one. So I hope this is clear. And guys, you can watch the concept videos as well, where I discuss these particular products in detail. Okay, and please do like and share the video. What is the further classification of capital market? So as I told you, whenever you segregate the capital and money market, so money market that generally deals in short term and capital market deals in long term. Money market is majorly regulated by RBI. Capital market is regulated by SEBI. Okay, so the further classification of capital market is primary market and secondary market. Okay, so option A is the correct answer for this particular question. Primary market, which generally deals in listing of securities or introduction of securities. Securities means shares, bond, mutual funds. Okay, so if any company is listing themselves on a stock exchange, so that listing happen through the route of IPO, initial public offering, and that take place in primary market. And secondary market, which is known for trading. So trading means buying and selling of securities. Okay, so here basically investor, they can directly buy shares from the owner of that company. Here in secondary market, investor, they generally trade among themselves. Okay, so secondary market is also known as aftermarket. Hope this is clear. Next question. Which of the following is the least risky instrument of money market? Okay, so whenever you go through the instruments of money market, these all are the part of money market instruments, right? So now you have to identify the least risky. So whenever you see the payoff, risk and return payoff, okay, let's say this is risk and this is a return. Okay, so higher the risk, higher the return, and lower the risk, lower the return. So this is a risk return payoff. So like in your saving account, we have these are least risky instrument because like there is a very less chances of default. That's why you get very less rate of interest on saving account. Mutual fund investment, share market investment, venture capital investment, these are highly risky instrument. Okay, so that's why your return is also higher side. Okay, now if you see these particular product, so out of these, treasury bill is the least risky instrument of money market. Why so? Because these are issued by government of India. Okay, if you remember the issuing authority, so commercial paper are issued by companies, certificate of deposit issued by banks, call money, notice money, these are interbank transactions. So out of all these instruments, out of all these five instruments, treasury bill is least risky instrument of money market. Hope this is clear. And treasury bill, as I mentioned, it is issued by government of India. So we have different denomination like 91 days, 182 days, 364 days, and the promise on these particular document is generally made by Government of India. Like if you see the issuing authority, so these are something like this: I, Government of India, promise to pay this, repay this amount after these 91 days or 182 days or 364 days. So there is a very, like, there is a minimal probability of default done by Government of India. Like in history, we never did. So even there is a probability of default of any bank or any company. But if you see government, so these are sovereigns in nature. So that's why they are generally called least risky. Commercial paper are highly risky instrument because these are issued by companies. And if you talk about the moderate, so certificate of deposit are moderate risk in return. Please do remember this one. Okay, so these are least risky instrument. That's why the return is also at downside. Commercial paper are highly risky instrument, so return is also at higher side. Okay, next one. Commercial paper are issued by, so I already gave you answer about this one. So what will be a correct answer? Companies. So commercial paper are issued by companies or any well-known company, so which is registered under Companies Act 1956. So these are the instrument through which companies, they generally fulfill their short-term money requirement. Okay, let's say TCS need fund for 150 days, so they'll issue some instrument. ITCS promise to pay this amount after this date. Okay, so these instrument, with the help of these particular instrument, basically the borrower, they are raising funds for short term duration, and commercial paper are generally used by companies or corporate houses. They borrow money at a fixed rate of interest. Okay, and these are the highly risky instrument. Who issue treasury bills? So I already answered this question as well. So Government of India will be correct answer for this particular one. And on behalf of Government of India, these are issued by RBI, Reserve Bank of India, in three major denomination. These are 91, A182, and 364 days. Which of the following is not a derivative instrument? So derivative, basically these are part of capital market, and derivative are basically the instrument whose value is derived from and dependent upon an underlying asset. Okay, so future, forward, option, swaps, these, like, we have four type of derivatives. So equity is not part of derivative. Okay, so option E will be correct answer for this particular question. Okay, so whenever you see the types of derivative, I already discussed derivative in detail as well. I created one separate video on based on capital market, money market, derivative, mutual funds. So do watch those videos. Okay, these are definitely going to help you to understand the financial market in India. Okay, next one, a security which price that the which price that is dependent upon or derived from an underlying asset is called. I just gave you this particular definition. So this is generally known as derivative. So what will be a correct answer? Option C. So whenever you see derivatives, so derivatives are financial instrument whose value is derived from or dependent upon an underlying asset. That means, let's say the current market price of TCS is 2200, suppose that. So on the basis of this spot price, you can calculate future price after 1 month price. Let's say after 1 month price is 2300. So this calculation is generally done in derivative market. We use different formulas like Black-Scholes model or different model. Okay, so this is like, if there is any changes on the current market price, definitely this will also change. If it is going up, this will also goes up, and if it is going down, so it will also comes down. Okay, so that is because the value of derivative is depend upon an underlying asset. Underlying asset can be shares, mutual, this commodity, currency, and all. Okay, so option C is the correct answer for this particular one. Next one, consider the following statement about hedge, arbitrage, and speculation. So you have given three definition about hedging, arbitrage, and speculation. Let's go through these all. So hedging is basically used for risk minimization. Okay, so this is a tool which is used by a financial analyst to minimize your risk. Okay, that is called hedging. So hedging is to take an offsetting position in an asset or investment that reduce the price risk of an existing position. So this is the correct definition. Arbitrage is basically buying in one market and selling in another market. Okay, let's say you buy apple from Simla and you sell it in Delhi. So in Simla you buy it 50 rupees per kg, you sell that in Delhi market 100 rupees per kg. So you make a margin of 50 rupees per kg. Okay, so that is arbitrage. So arbitrage is a purchase and sale of same asset in different market. So again, this is correct. Speculation is kind of gambling. Okay, so speculation, let's say if any company is coming with IPO, so you invested in that particular company based on your research, or you have some expectations this company share price will goes up. So that is generally known as speculation. Okay, speculation is purchase of an asset with hope that it will become more valuable in the future. So this is again correct. So what will be a correct answer for this particular question? Your answer will be option D, 1, 2 and 3, right? So hope this is these three terms are very important, guys. Believe me, please do remember this one. So many time examiner they generally ask question based on these particular terminologies. So hedging is generally used by mutual fund managers or other share market analysts to minimize your risk. So if let's say you made some position in the market condition is adverse, so to secure your position you make some other position. So that is generally called hedging. Arbitrage is buying in one market where prices are low and selling in another market where prices are high. Okay, speculation is you have some like some expectations from that particular commodity, the prices will goes up in near market. Okay, so next question is about type of bond. So I already did a single video on types of bond. If you have gone through that particular video, you will definitely answer this question. Okay, so fixed rate bond means where the rate of interest or the coupon rate is fixed for that particular one. Let's say you invested 1 lakh rupees and the rate of interest is 8% per annum throughout the 10-year maturity or 15-year maturity. Okay, so when the coupon rate is nothing, it is rate of interest which we earn or investor earn on invest while he invests in bonds remain same throughout the course of the investment. So it is a correct statement. Floating rate of bonds, when the float means variable, when the rate of interest varies as per the LIBOR-MIBOR concept. Okay, when the coupon rate keep fluctuating during the course of the investment. So again, this is also correct. Callable and putable bonds are, these are two options. So like we have optionability of bonds. Okay, so callable bonds will generally give right to the issuer. So let's say there is a company who issue bond for 10 years. So in case of callable bond, they have a right, they can buy back these particular bond before the maturity period, like they buy back in 7 years. So that is callable. Putable bond, that generally give a right to the purchaser but not an obligation to buy back. Let's say you invested in some putable bond for 10 years. After 7 years you find some better investment opportunities, or you want to shuffle your funds, turn your fund in some other investments. Okay, so you can sell that particular one before maturity. So when the issuer of bond calls out the so the right is reserved to issuer of bond but not an obligation, right, to redeem the bond even before it reach to the maturity period. Again, this is correct. Putable, when the investor decide to sell their bond and get their money back before maturity, it is called putable. Okay, so we have optionability in the bond. So on the basis of this particular optionability, we have right reserve. Okay, so that is called callable and putable bond. So option D will be correct answer. All four statements or all four definitions are correct regarding to fixed rate, floating rate, or callable and putable bond. Okay, so I already did a video on types of bond. Please go through that one. That, like, if you watch that particular one, you will, I have given some cases. So with the help of those particular cases, you will easily understand these particular terminologies. And guys, please do like and share the video. Next one, consider the following with respect to preference shares. So type of shares, we already did a separate video on types of shares. Okay, so we have major two type of share. One is equity and another one is preference shares. So here question is generally based on preference shares. So preference shares, as the name state, they have given preference. So two major preference. One is at the time of liquidation, and another one is dividend distribution. Okay, so they get first preference when it comes to payout of dividend, so which is a correct statement. When the company wind up, preference shareholders have the right of getting repaid over preference shares. Okay, this is the correct one again. Preference shareholders have voting right. This is an incorrect statement. So voting right, that generally belongs to equity shares. So what will be a correct answer for this one? 1 and 2. So 1 and 2 means option A will be correct answer for this particular question. Okay. Achha, we have to find out wrong one. Okay, sorry. So we have to find out wrong one. So what will be a correct answer? Option D, which is of statement 3 only. Hope you're getting this particular one. So preference shares, they have given some preference, two major preference. First one is at the time of dividend distribution, and second time when company wind up. So when we repaid the capital, so after the repayment of loan, major debt, or employee salary, so when it comes to preference or equity shares, so first we make a payout to preference shareholders. So it is given preference over equity shares. Okay, so that is the case. Hope this is clear. Next one. Consider the following statement with respect to capital market and find out the wrong one. So you have to identify a wrong statement about capital market. So first one, capital market deals with short-term securities. This is incorrect statement. Okay. So first will be right answer as of now. So capital market deals with long-term, medium to long-term funds or more than 1 year securities, right? This capital market is regulated by SEBI. This is correct statement. The primary market is market where securities are listed, okay, introduced, which is correct one. Secondary market where previously securities are bought and sold means traded, again correct. Shares, bond, mutual funds are capital market instruments. So your wrong statement is option A. So what will be your correct answer? Option A will be correct answer for this particular one, right? So I hope this is clear to all of you. Next one. Consider the following statement about call money, notice money, and term money, and you have to identify the wrong one. Okay. So from the given statement, which is incorrect, so you have to identify incorrect definition about call money, notice money, and term money. So call money, notice money, term money, these all are interbank transaction. Interbank means the buyer and seller are banks. Okay. So when one bank need funds and they borrow from other banks, so that transaction is generally known as interbank transaction. So if it is for overnight, that is called call money. If it is 2 to 14 days, it is known as notice money. And if it is 15 to 364 days or more than 14 days, then it is known as term money. So call money under this the overnight funds, which is correct. Under notice money, 2 to 14 days and more than 14 days. So all statements are correct. None is incorrect. So you have to identify incorrect. So all are correct statements. So option D will be right answer for this particular question. Okay. I hope you guys liking this content or the concept as well. So I already did number of videos based on capital market or money market or types of shares, mutual fund, types of mutual funds, bonds, types of bonds, terminologies. So go watch those particular videos. That these will definitely going to help you in your upcoming examination. Okay. Next question. Which of the following statement is are incorrect regarding certificate of deposit, CDs? So CDs, certificate of deposit, are issued by banks. These are issued for a minimum period of 7 days and maximum up to 1 year. The denomination is 1 lakh and multiple. Okay, so this is a part of money market instrument. Okay, certificate of deposit is the product offered by bank, which is correct answer. Maturity is 7 days and not more than 1 year. Again, correct one. Amount denomination is 1 lakh and multiple. So whenever anyone who invest in or when bank issue these particular instruments, so their denomination size is 1 lakh and multiple. Okay, these can be issued to individual, corporate, and companies. So incorrect, none is incorrect statement. So what will be a correct answer? Option E. So none of the above is incorrect statement about certificate of deposit. All are the correct statement about certificate of deposit. Okay, let's move further, guys. Next question on your screen. Which of the following is are incorrect regarding commercial paper? So commercial paper are issued by companies as I earlier told you, these are the highly risky instrument of money market, and these are issued for a minimum time duration of 15 days and maximum for 364 days, and their denomination is 5 lakh and multiple. Okay, so commercial paper are popular instrument issued by companies. These are unsecured and highly risky. Okay, fixed rate of interest. Commercial paper can be issued for a maturity of 15 days to 1 year. Again, correct. Commercial paper can be issued in a denomination of 1 lakh. So this is incorrect statement. It should be 5 lakh. Okay. So 5 lakh and multiple. So option D will be correct answer because it is an incorrect statement about commercial paper. Okay. So commercial paper are generally issued in the denomination of 5 lakh and multiple, and certificate of deposit they are issued in the multiple of 1 lakh. Okay, hope this is clear. Next one. Next question is based on treasury bills. So consider the following statement regarding treasury bill and find out the wrong one. So you have to identify the wrong statement. Treasury bills are money market instrument issued by Government of India, which is a correct statement. Treasury bills are least risky instrument of money market, again correct statement. Okay, treasury bills are normally issued at a price less than their face value, redeemed at face value, again very correct statement. Okay, they are issued at par. Treasury bills are available in for a minimum amount of 50,000. So this is an incorrect statement. The denomination is 25,000 and multiple in case of treasury bills. So option D will be correct answer. So their denomination is 25,000. So treasury bills 25,000, certificate of deposit 1 lakh, and commercial paper 5 lakh. So do remember all these three. Okay, next one. Which of the following is incorrect about money market? So which statement is incorrect about money market? So the money market is a market for short-term funds, which is deal in financial asset. So this is the correct. So money market deals up to 1 year. Treasury bills, commercial paper, call money, notice money are money market instrument. Again correct. Money market is regulated by IRDA. So this is incorrect statement. So your answer should be RBI. Primarily regulated by RBI, Reserve Bank of India. So what will be your correct answer? Option C will be correct answer for this particular one. So money market is regulated by Reserve Bank of India. Next one, guys. Which of the following is incorrect regarding the financial market? So now the statements are about financial market, and you have to identify the incorrect one. Okay. So financial market referred broadly to any marketplace trading of securities, which is a correct statement. There are many kind of financial market, including share market, forex, bond. Again correct. These market may include assets or securities that are either traded on exchange as on over the counter OTC. Again correct one. Financial market trade in all type of securities and are critical to smooth the operation of capitalistic society. Again correct. So all statement are correct. So none of the above will be right answer for this particular question. Okay, so capital market is basically which deals with finance related products. So it can be in it can be in the form of exchange, or it can be in the form of over the counter as well. Okay, so a general decline in stock market over a period is known as. So we have two type of market. One is bull market, another one is bear market. So what is bull market or bearish approach? Let's say Sensex current price is 18,000. Okay, Sensex is trading at 18,000, the BSE's index. So previously it was 17,000, and market have expectations by after 2 months it will reach to 20,000. So this approach is generally known as bullish. Okay, so we are bullish about Indian stock market. If the case is vice versa, previously let's say before 2 months it was 20,000, now it came to 17,000, and we have an expectation after some time it will goes to 17,000. So it is generally known as bearish. Okay, it is called bearish. It is known as bull and it is known as bearish. So bull is upward, uptrend. Okay, if any shares prices are increasing and we have an expectation after some time it will goes up. So that approach or that expectation or that theory is generally known as bullish. Bearish is just opposite. So in this decline, that means what will be a correct answer? Bearish. Okay. Next one. With reference to mutual fund, AMC stand for. AMC is generally known as Asset Management Company. So I hope you remember the chart of mutual fund when we explain mutual fund in detail. So we talk about AMC. So these are the fund management companies who manage fund on the behalf of investors. Okay, they have some working profile. Those are generally known as fund manager. Okay, so AMC stand for Asset Management Company, which means option B will be right answer for this particular one. Okay, so AMC. Asset management companies, these are fund management houses who generally manage fund on behalf of investors. Next one, an offsetting position. Please read carefully. An offsetting position in an asset or investment that reduce the price risk of an existing position is called. So I just like when we read about arbitrage, speculation, hedging. So we go through this particular one. So what will be a correct answer? Risk minimization. So they are what will be a correct answer? Hedging. So hedging option C is the correct answer. Next one, dash is the simultaneous purchase and sale of the same asset in different market is known as, so buying in one market, selling in another market. So what it is known as? It is called arbitrage. So option C will be correct answer for this particular one. Next one, when an already listed company make a fresh issue of securities to the public is known as, so what will be a correct answer? FPU. So initial public offering is when an unlisted company they issue their shares to the public for the first time. So that is known as IPO. But FPO is when an already listed company they sells a fresh part of their ownership to the public. So that is called FPO. Like let's say TCS is already listed in the market. So if they sell some portion to the public in the form of shares, again, so that is known as FPO. Okay, follow on public offer. Next one, dash are derivative contract that allow the exchange of cash flow between two parties. So derivatives, these all are the derivative instrument, and cash flow is generally managed through swaps. Okay, so swaps are private agreements. So these are part of derivatives. So these private entities, those who generally deals in different market, like one is US citizen, one is Indian citizen. Okay, so US citizen he need funds in India, and Indian businessman he need funds in USA. So they comes into an agreement. So that agreement is generally known as swaps. So we have currency swaps where we generally exchange principal plus interest. We have interest rate swap where we generally exchange interest only. Okay, so I already go like we did a video on this derivative, so where we explain with cases to the swap as well. Okay, next one, when the interest rate is zero and the issuer is only applicable to repay the principal amount to the investor, such is called. So these are generally known as zero coupon bond. Okay, so these are generally issued at par. Okay, so let's say, so in this, but like usually in bonds, when you invest in bonds, so you get some coupon rate. Okay, that is coupon means interest rate. But there are some bonds where you will get the money. Okay, let's say if you like the case is you will also, the rate of interest is that is mentioned zero, but you'll get some return. Let's say if you invest 90 rupees today, so you'll get 100 rupees after 1 year. So you're getting 10% rate of interest or more than 10% rate of interest on this particular one. But here there is no coupon rate mentioned, but technically you are getting 10 rupees from this particular investment. So that is generally known as zero coupon bonds. Next one, which type of shares have voting right? So we already discussed this one. So what will be a correct answer? Equity shares. So equity shares, they have a voting right. They have a right to attend the AGM, annual general meeting of any listed company, and they can attend that particular meeting, or even they can participate in voting as well. Okay, and so many time examiner they generally ask question based on voting rights. So it reserved to equity shareholders. Please do remember this one. Next one, which kind of shares get preference when it comes to a payout of dividend? So this is very simple question. What will be a correct answer? Preference shares. So option B will be right answer for this one. Next one, guys. Which of the following statement is our correct about capital market? So you have to find out the correct statement. Capital market may be defined as a market dealing with medium to long term funds, which is a correct one. It is regulated by SEBI, again correct one. Capital market further divided into two parts. One is primary, another one is secondary. So all of the above, Option D will be correct answer for this particular one. Okay. Next one. Which of the following market is known for listing of securities? So capital market is further divided into two parts. One is primary, another one is secondary. So primary market is known as listing, and secondary market is generally known for trading of securities, right? So primary market will be correct answer. Next one, certificate of deposit are issued by. So what will be correct answer? CDs are issued by bank in a denomination of 1 lakh and multiple. So these are the least risky, these are the moderate risk return instruments of money market. Next one, in which kind of fund investor can enter or exit throughout the year at current NAV? So what will be a correct answer? So this is based on mutual fund, types of mutual fund. So these are open-ended mutual fund. So we have two major categories of mutual fund. One is open-ended, another one is close-ended. So close-ended, where we have a lock-in period or a fixed maturity period, okay, but in case of open-ended, there is as such no maturity period, right? So option D will be right answer for this particular question. Okay. So guys, I'll discuss the remaining questions in our upcoming videos. So actually, someone at my door. So I hope you enjoy this particular quiz. So I'll continue with the remaining one as well. So if you like, please do share this video with your friends. And if you are new to my channel, so please do subscribe. And there are so many videos based on the content, fundamentals, or MCQs as well. So please go through, watch these videos, and if you have any query related to any point, so do mention in comment section. And if you are new, please do subscribe. So thank you for watching this video, guys. I'll see you soon with a new video. Thank you.